Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video we're going to be taking a look at New Zealand yen as the price has broken to the downside and the yen strength seems to have returned to the market. So before I show you how aggressive the yen has been today, I just wanted to kind of show you what's going on Kiwi yen on a bigger picture first before we kind of dive into that lower time frame. And this is all technical analysis based really. If we take a look at sort of it from a fundamental point of view, the RBNZ is still looking to hike interest rates. The Bank of Japan aren't really looking to do that, or they're trying to refrain from doing that. So really speaking, we should still see Kiwi yen move to the upside. However, there's been a little bit of a switch in the market conditions today where the sort of risk factor has come into play, where the market switched from the risk on to sort of the risk off, and the yen has strengthened significantly. Now that means that we might pull down into another area of support before we see the continuation of the upward move here, because we can clearly see the market is working within this bullish channel here. However, we also have the dynamic of a range play here on the weekly time frame. Now the market has been in this range for about 40 weeks now, so we've been trading between the 87.75 highs and the 80.75 lows, and we've been trading between that level for about 40 weeks now. Price breaking through this bullish channel support here suggests that we could maybe trade back down to that 80.75 handle, where we may see another move to the upside in line with this range bound market. Now just to go down to the daily time frame, you can see how aggressive the yen has been in the market today. The price of Kiwi yen fell by 180 pips today, and not that that can't happen. Obviously we've seen that happen in the past, most recently through here when that news came out from the Bank of Japan, but you can see the past sort of few days the range has been very shallow. Now what that typically does lead to is a larger breakout in the market, and we actually came back up into a key area of resistance, which was around about the 84.50 handle, and price then dropped to the downside. So if this momentum is going to continue, then I would expect the price to come back down to that 80.75 low on the range, on the weekly range. So again, if we get this daily close, the one thing you can do is add a Fibonacci retracement tool and have a little look at if price is going to come back maybe to the 50% or to the 38.2. Now if I go to the 4-hour time frame, you can see that the 38.2 lines up with the previous range area. Now I don't use Fibonacci's a lot. I don't think that the be all and end all of trading. However, if you are going to use them in your trading, you want to make sure that the level coincides or has confluence with other confluences, like this horizontal level of resistance here around about the sort of 83.60 handle. So what basically happened was price came up into this area where we had a large sell-off, with price moving down into sort of 81.25s. We came back, we retested that area. Price then continued to break lower, and I'm looking to see where the next lower high will come into play in order for us to look for that continuation to the downside. Now the one area that we've spotted is this area around about 83.60, has a 38.2 confluence on a Fibonacci retracement. Also this kind of consolidative previous lows in the market as well. So that's an area there where I want to be looking to see if sellers are going to come back into the market. And what I mean by that is if price trades back up to this area here, do we start to see bearish confluence? Do we get bearish candlesticks forming? Do we see sellers starting to reintroduce themselves here? Do we see sort of high test candles, things like that, to suggest that the market is going to start pushing back to the downside? So that's what I'm going to look for here. Alternatively, what you could look for is a little bit of sideways movement. So if price was to move a little bit sideways, maybe come back to the 61.8 fib and just have a really small range, and then price could maybe trade out of that range, that would also offer opportunities down to the 81.25 handle as well, before we look for obviously the bigger move, which would be to the 80.75. So hopefully that made sense. Just having a little look at that yen strength coming into the market. If it did, please leave this video a thumbs up, subscribe to the YouTube channel to see some more forex trading content, and I'll speak to you in the next video.